You ever see a company that is just absolutely crushing it, right? I mean, incredible success, everything's going great, but then you look at their stock and it's telling a totally different, much more confusing story. Well, that's the exact paradox we are diving into today with the AI powerhouse, Palantir. So on one hand, you've got these blockbuster results. Revenue is just soaring, going through the roof, but then you look over at the stock price and it feels like it's stuck in the mud. It's this major disconnect, and honestly, it's left a lot of investors just scratching their heads.
So how on earth is that possible? How can a company be doing so well and the stock just doesn't care? Well, getting to the bottom of this little mystery actually reveals a super important lesson about how the market really works.
Look, most people just watch the markets go up and down. This channel is for people who want to understand why they move. If you want to stay ahead of that curve, go ahead and subscribe.
All right, so the first piece of the puzzle is this. You have to understand that markets don't really reward what a company did in the past. They're all about pricing what they think is going to happen in the future. And for Palantir, that future was already priced for, well, absolute perfection. You see, at a certain point, it wasn't just about the numbers anymore. This incredibly powerful story took over. This narrative that Palantir's dominance in the age of AI wasn't just a possibility. No, it was practically guaranteed. A sure thing. And that whole story led to this absolutely extraordinary number. At its peak, Palantir stock was trading at over 100 times its sales. I mean, think about that. That's a price tag that basically assumes flawless, perfect execution for years and years to come. And just to put that number into perspective, take a look at this. You can see the massive difference. The expectations that were baked into Palantir's stock price were just worlds apart from other really solid, successful software companies. The market was paying this huge premium, and it was just immense. But here's where the story takes a really interesting twist. And it's not just about the valuation. It's something deeper, almost philosophical, and it gets to the very heart of what AI is. So for years, Palantir had this incredible advantage, what investors call a moat, to protect it. See, they weren't just building AI. They were absolute wizards at plugging that AI into the really complex, really messy, real-world systems of huge organizations. That was their secret sauce. But then, something began to change. A totally new possibility started popping up. And the weird thing is, it wasn't coming from a competitor. It was coming from inside the world of AI development itself. It felt like the ground was starting to move under everyone's feet. And this is the new threat. It's a huge what if. What if AI gets so good that it can just write its own software? I mean, why would companies need to buy these super complex, expensive platforms anymore if they could just ask their own new AI tools to build a custom solution for them? Suddenly, that huge protective moat, well, it starts looking a lot more like a puddle. So, okay, how does this kind of scary potential threat crash into the company's actual financial numbers? Well, when you bring those two things together, you start to see a much deeper truth about what was happening with the stock. I mean, if you just looked at the surface, things looked amazing. You had key metrics that Wall Street loves, like the Rule of 40. It's basically a quick health check for software companies, and Palantir was passing with flying colors. It painted this picture of a super healthy, thriving business. But those big, shiny, high-level numbers can sometimes hide what's really going on under the hood. For instance, paying employees with tons of stock can really eat into your actual profits. And at the same time, if the company keeps issuing more and more shares, well, think of it like a pizza. They're just cutting it into more and more slices, so the slice you own keeps getting smaller. And both of those things can act like an anchor, dragging down the stock price. And this, right here, brings us to the core trap that so many people fall into. It's this absolutely critical idea that a great company with a growing business is not the same thing as a great stock. They are two different things, often driven by completely different forces. So this is how we finally solve our little mystery. The stock isn't struggling because the company is failing. Not at all. It's going through something called a re-rating, which is just a fancy way of saying the market is fundamentally rewriting its entire story about the company. Yeah, the story is slowly changing. It's shifting away from Palantir as the inevitable, guaranteed AI monopoly to something more like, okay, Palantir is a really strong player, but it's in a much more crowded, much more competitive field now. So the real issue here was never about the company's actual performance, which, again, has been impressive. The risk was that the market's vision of its future was just too perfect.
leaving absolutely zero room for error, zero room for anything less than spectacular.
So after going through all this, what's the big lesson you should take away? What's the deeper truth hidden inside this whole Palantir paradox?
Is this really profound and, frankly, kind of a chilling final thought? The very technology that gives a company its incredible advantage can evolve so fast that it becomes its single biggest threat. And that is a lesson that echoes far, far beyond just this one company.
Most investors are going to spend the rest of the year just chasing headlines and reacting to fear. But the real edge, the real alpha, is in understanding the underlying structure of the market before it becomes common knowledge. So if you want to keep your focus on the signals that actually matter, this is where we do that.